Hello there, everyone. This is Craig at Max Trading. I'm here with Eusebio today, and it's a pleasure to welcome you to this NFP real-time trading session. Good to have you in the room with us. The non-farm payroll release is coming up in just a few minutes, and Eusebio will explain for us the conditions that we like to see. And if we get those, then we can expect some good trading and some really nice price action. If we don't, then Eusebio may decide to force a trade. If he does that, it just means that he'll enter a trade that a max trader would normally not enter. It's a trade that we know is too risky, and we like to take trades that have the highest probability of success. But if he does take a risky trade, it's just so that you can see how the max methods protect the account and take advantage of any potential profit that the markets may provide. Of course, we never know what the NFP numbers will be. We also don't know how the market will react to those numbers. Sometimes it's a bit strange. But we look forward to and we appreciate the opportunity to show you how max trading takes advantage of the movement in the markets, and even more importantly, perhaps, how our risk management protects the account balance as we trade. I'll ask that you would please remember this is not a trading room. We are not providing trade calls or trade signals. Nothing that you see or hear in this webinar should be taken as entry advice or an exit recommendation. All of it is for educational purposes only. Eusebio is here to show us the max charts and lead us during this NFP session. Some of you are new to Max. You've not yet had the opportunity to meet Eusebio. You will soon find that he is a highly skilled trader and a great teacher as well, and just enjoys helping his fellow traders. I appreciate that so much. The methods you see today are those which are taught in our Max training courses, which begin in just a few days now. We provide really nice discounts for those who take the time to attend our webinar or watch the video playback, and we'll try to make sure that those links are available for you. Really do appreciate you being with us today, and Eusebio, I think that's enough preliminaries. Let's get started. Thanks, Eusebio, for sharing time with us today, and the microphone is yours.
Thanks, Craig. Hello, everyone. Welcome to this non-farm payroll session. So I'm really glad and happy to see so many attendees, and so I hope you will enjoy this presentation of the Max in the context of the non-farm payroll. Before starting, I'd like to make a quick video and audio check. Do you see my screen, my mouse, and do you hear me well? So if you would like to type a yes or a Y, either in the question area of GoToWebinar or for our Max member in our Max private chat room. Okay, thanks. Thanks a lot. I see a lot of yes, yes, all good, yes, and yes. I always appreciate. So let me explain what is the context of the non-farm payroll. We have two non-farm payrolls today, one on the Canadian dollar, so for Canada, and one in USA. And let me explain for USA, which is the most important, so between both. How do the big boys, in fact, consider this non-farm payroll employment change news release in order to adapt their position or not? Of course, it depends what the data will be, how the data will be released. For many news releases which are important, so we need to have a big deviation between the actual data, so the release data, and the forecast. However, and when I say a big deviation, I mean a number which will be either way larger or way smaller than the forecast. Typically for the non-farm payroll on the US dollar, a good deviation threshold will be is around 40 to 50K. If we don't have a deviation larger than 40 or 50K, in fact, the impact will be minimum in the market. We may have some volatility, but not a real momentum. So with a larger deviation, positive or negative, so most of the time, not always, but most of the time, we will see directional and sustainable movement. However, this will be true, and this is the specificity of the non-farm payroll, this will be true if also the unemployment rate will be in agreement. This means that if we have a positive deviation for the non-farm payroll, I mean a larger number by more than 40 or 50K than the forecast, we need to see a smaller unemployment rate. And vice versa. If we have a negative non-farm payroll, we need to have a positive deviation for the unemployment rate. And similarly for the non-farm payroll in Canada. So now with the US non-farm payroll, we have another data released at the same time, the average hourly earnings. If the non-farm payroll and the unemployment rate are in agreement, and if the average hourly earnings is also in agreement, this will emphasize the impact on the pairs in the Forex, and many pairs will be impacted. If the average hourly earnings is not in agreement, so the impact will not be and will not be changed for the two other releases. So we need mainly to see the non-farm and the unemployment rate so in agreement, positive or negative. So, and when the data are released, we have to wait minimum 2 minutes, because what the calendar does not show here is 2 minutes after the non-farm payroll release, we will have the revision of the previous month's non-farm payroll, and sometimes this may impact also the market. So, and so we have approximately 7 minutes before the news release. Let me change first of all the clock of my calendar, because I realize I have not changed my clock here. We have had the daily selling time switch last weekend. Now I have the appropriate time which corresponds to my time zone, which is 6 hours ahead of New York time. So now we have to wait around 6.5 minutes. Let me show you quickly how I adjust my chart. Let's take, for example, the pound US dollar, or let's take perhaps another one. Let's see, the pound CAD, or they are pretty much the same. So I'm showing here a simplified template of our max template. So we have some indicators. Of course, we have our two sets of indicators for the direction for the ETF. So we have the two here, orange and yellow line, which are the ETF lines, and we have the directional indicator, which is called also the companion indicator, which is made of a slow bias in red and green and a fast bias in brown and blue. And it is this companion indicator with the slow bias, green, red, which indicate the trend to consider. For example, here for since the Frankfurt Open, we had to consider on this pair, pound US dollar, only short trade, and you can see that the bias, the slow bias, has nicely caught this movement for the European session. So, and now there is an attempt for the trend to reverse, but I would be very careful with this trend reversal attempt, because we are in the context of the non-farm payroll, and it's extremely possible that this up movement was or is an anticipation or a market manipulation before the news release. After the news release, we will have a better idea of what is happening. Anyway, the pound is still very weak, extremely weak, even extremely weak. And the US dollar, for example, let me check the US dollar. The US dollar is neutral but gaining somewhat strength. So I would not be surprised to see the trend reversing back to a downtrend. But I don't like to predict what the market should do. I'm not a good predictor, by the way, so I prefer to watch what is happening and to take trade with what is happening. And the global context, as I perceive, but I may be wrong, of course, the global context is weak for the pound due to the context in UK, especially the negotiations about the Brexit. So I'm also showing on the chart, you will see that them on some charts, so some horizontal lines which are max price levels. For this week and for some pairs, these max price levels are rather far away, but with some pairs, and let's take for example the pound Swiss here. The pound Swiss, we have a nice price level, and you can see that the price is ranging for the moment around that level. And during we can see during the previous days, for the previous hours, how the price has nicely moved around this price level and the previous price level, so on the previous day, and so on. You can see how the price reacts to these levels. These levels are updated every week, every weekend, and they are made available, in fact, on the Sunday. So I will update them, so this weekend, for the coming week. And when we have such a max price level, if we are engaged in a trade, or if we consider to open a trade or to close a trade, we will have to pay attention if the price is at the proximity of such a level. So this will somewhat get our attention in the way to make the entry or to make the exit. For example, if we have a short entry on a pair and the price is just above the level, we should be careful, because this level may be a resistance level to the downside. It will be better to wait for the price to be below the level. Similarly, if we are engaged in a trade, for example here a short trade, and the price seems to bounce off or to range around this level, this would be a nice level to reduce the trade size, to bank some profit, or to limit the loss on a losing trade. So we have some other indicator which will help us also to time our exit, not to predict what the price can do, but to time some exit with exit techniques we have. Let me show you now the note I have prepared today for the non-farm payroll. So for the US dollar, we have a forecast for the employment change of 175K. For the unemployment rate, 3.8%, and for the average hourly earnings, 0.2%. And the conditions are the following. If the non-farm payroll employment change is larger than 210K and the unemployment rate smaller than 3.7%, then we will have a trade opportunity on the US dollar. So the US dollar should be considered as bullish, and so we can, for example, short a pair like the pound US dollar. On the contrary, if the non-farm payroll is smaller than 125, 135K and the unemployment rate larger than 3.9%, then the US dollar should be bearish and we can go long on the pound US dollar. In all the other situations, so the non-farm payroll will not provide a tradable situation with the US dollar, and we have similar logic with the CAD. So I leave you read these notes. So we will have to wait patiently now for around 1 minute what the news will be, and in the meantime we can of course observe what the market is doing. It is not unusual to see some speculative movement before the news release. You can see on the chart, on my chart, one red dotted vertical line. This is the vertical line corresponding to the moment when the news will be released, and I always draw such red vertical line on my chart corresponding to important news release. You know that not all are important, and I will come back in a few moments how we consider the important news release. I always place on my chart lines such that to remind me that we are facing, or we have, an important news release. So now the news is released. You can see that the market is reacting on some pairs, but not too much. So most probably the news does not give a big deviation. So let's have a quick look on the calendar here. I can push on any green button. 196. So we have a deviation of 24K. So we don't have a deviation big enough for the non-farm payroll. We don't need to wait for the unemployment rate. We are not in a condition of a directional and sustainable movement. And you see the unemployment rate is unchanged. So the non-farm payroll does not give a nice directional and sustainable condition. For the CAD, we have here also a small deviation for the CAD, only around 10K, which is not enough, and an unemployment rate which is unchanged. So both non-farm payroll do not provide, in fact, nice conditions for for trading in one specific direction. Of course, these create some volatility. If we consider, for example, the pound US dollar, we have had that spike. The length of this bar for the moment is, you see, only 20 pips. Of course, the bar has still several minutes to run before it closes, but it is not a large spike as we are used to see when we have big deviations on both news release. So the pound US dollar does not provide an opportunity with the non-farm payroll. Similarly with the pound CAD, we can see that now the spike becomes important. The news is a little better for the CAD than the US dollar, but it is still not a good news for a directional and sustainable movement. So I would not be surprised to see the price coming back in the following minutes. So let's patient a few minutes for the volatility to slow down and to see if we will have some opportunity. In the meantime, I see that the pound is gaining some strength, but still being weak. So I will not be surprised to see all these green uptrend reversing to the downside, which is what is already happening with the pound Aussie, for example. So what I will do in such a context, as soon as the volatility will slow down, I will take one pair, whatever the pair which will seem for me the best moving pair at that moment. So, and I will force a trade just to show how we apply our trade risk management to try to we handle a trade. But a forced trade is a trade we usually don't take, because a forced trade is always a risky trade when the conditions are not appropriate, so it's better not to trade. And I like to remember that with the MAX, we have a trade under three types of conditions. First of all, the technical conditions is the pair presenting an entry setup. Then we have the risk condition. We have to choose an appropriate risk for the trade, and then is the trade in agreement with the context. The context is not clear with the non-farm payroll, so we have no context with the non-farm payroll. So the global context we have, which is not positive for the pound today, so still hold. And so for me, the best direction for the moment to trade is to short the pound. So this bar will close in around 1 minute now, a little less than 1 minute. You can see on the pound US dollar and on the pound CAD, the price seems to already come back, so to retrace. So just to illustrate that the impact should not be important. Of course, we are never sure 100% because the big boys take also into consideration other factors, lots of factors. The non-farm payroll is not the only factor they take into consideration for today, for every day, by the way. So sometimes the prices do not follow one specific news release. But I like to play the market with the most common situation. So, so let's wait for the close of the present bar. So the present bar has closed. We have still some volatility. You see how the price is moving pretty much fast. So on several of our pairs, this shows some activity in the market. And the pound is becoming weaker again. The Aussie and the yen are gaining strength. The Kiwi is gaining strength also, so we have a lot of pairs we can consider as potential opportunities as soon as we will have an entry setup. So now, how do I choose my pair for every day? It's very easy. Let me show you our website. So on our website, maxtradingsystem.com, every week we update the page which is called the News Watch. So at www.maxtradingsystem.com/newswatch. So we update some geopolitical, economical elements to take into account. Then we have our calendar. This calendar is usually smaller, way smaller than any other economical calendar. We consider only what are the important news. And then to increase the odds to have nice movement on average every day, so we determine what are for the week the best moving pairs, and from this top 10 pairs list and the news release of our calendar, we define in advance, 1 week in advance, every weekend, we define for each day of the week what are the pairs which are interesting to follow. And so today we have the pound CAD, the pound US dollar, the pound Kiwi, the pound Aussie, and the pound Swiss. And these 5 pairs are the pairs I'm monitoring. And I like to add the pound yen, because the pound yen is also usually inside the top 10 pairs. So I'm monitoring 6 pairs, as you can see. So the pound CAD, the pound US dollar, the pound Kiwi, the pound Aussie, the pound Swiss, and the pound yen. You see the price is retracing in the pound CAD and in the pound US dollar. These 2 pairs were the pair where the spike were the larger, and the price is coming back simply because the non-farm payroll for the respective country does not provide the appropriate conditions to have a directional and sustainable movement. So, and if indeed the price comes back, we will see the trend resuming to the downside. We may have soon, at the close of this candle in around 1 minute now, a short setup on the pound yen, but this short setup, perhaps it will be valid if the trend resumes to the downside, but it will be a rather risky setup because the price is already at an extreme level. But when the price is at an extreme level, so we still have some potential for the rest of the day, but the potential should be limited. Our max members know what I mean by an extreme level, so which explains that the trade will be riskier. So, but we have always to wait for the bar to close before defining if the bar is an entry setup bar. The pound Aussie seems to give pretty much soon also an entry setup, but the bars are too long. Long bars are never entry setup. By the way, this blue bar is not an entry setup, so we will have to wait for the next candle. Okay, for the pound yen and the pound yen, no, for the pound yen, the trend has not resumed to the downside. It will resume to the downside with the present candle, so we still have to wait. You see the trend seems to reverse in the pound CAD. So if the price moves a few pips below, the trend will reverse. But we have to wait for the bar to close. And if this candle closes as a red bar and the trend has, this will not be, by the way, an entry setup. So we have to wait. The most promising pairs now are the pound Swiss and the pound yen. The pound Aussie also. But we have to wait for this bar to close. Yeah, one of our max members in our private chat room says no spike on the pound US dollar on his broker. Yeah, indeed. Don't forget, Rodolfo, that your broker is himself a market maker. And so most of the brokers who feed MetaTrader are not liquidity provider, market makers, and so they manufacture the data feed they send to their customers with the data feed of their own liquidity providers. And so this is not a surprise to see some differences between the data feed of several brokers. And so don't be surprised to see no spike with your broker. So for the moment, the best promising pairs are the pound Swiss and the pound yen, but and possibly the pound card, but the setup must be validated when the bar will close. It appears that probably for the pound Swiss it will be the case. For the pound yen, not yet. What some of our Max members do is to switch to a smaller time frame to try to better time their entries, and that's perfectly good. So, and sometimes this helps to enter earlier into a movement, into a trade. Yeah, Adrian, it depends on the liquidity provider of the broker or of the. It depends on the origin of the data of the prices each providers have. In fact, don't forget that the Forex is not a centralized market, so there are lots of providers for data feed for quotes. In fact, and so this explains why there are big differences, sometimes big differences between different providers. So now the trend is also reversing on the pound Kiwi. It's reversing on the pound Aussie. So we are indeed coming back to the previous down trend. The volatility is still present. We have long bars on the charts. Long bars are not good situation to open a trade most of the time. The only exception for me when a long bar is appropriate to open a trade, as a max trader, we know that a long bar is never a good entry setup. To any rule, there are always exceptions, and so there was one exception with the long bar. A long bar may be a good setup when we have a strong context behind us, and with the non-farm payroll, we have no specific context. So a long bar is not a good entry. The context we have on the pound, making the pound a weak currency today, is not enough to consider an entry after a long bar. So the best promising pair for the moment I see maybe the pound yen, but you can see the price is accelerating sometimes very much. So there is still volatility due to these news we have had. So there is some hesitancy in the market. What I can say about all these pairs is if we have an entry setup to go short, because now all the trends are to the downside, as I was expecting, so all these pairs are in the context of what we call a true trend. In this case, a downtrend, a true trend. A true trend is a trend with a specific characteristic. Let's take, for example, the pound US dollar. You can see that this down movement has started. Here we have the London Open on this orange vertical line, and the previous one corresponds to the Frankfurt Open. And this down movement has started a little moment before the Frankfurt Open. And if I take the highest high there and the lowest low we are seeing for the moment, so we have a movement, we can qualify as a true trend. And when we are in the context of a true trend, we know that in 75% of the case, this true trend will exhaust in a specific time period, and the specific time period is a period of around 2 hours we can place on the chart. And I'm going to place that time window on the chart here. I will draw that rectangle in red, and let me define the time period of that rectangle that way. So this represents a time window where the true trend will exhaust in 75% of the time. In around 10 to 15% the trend can exhaust earlier, and it seems that we will be in that context. So I will not be surprised to see this true trend exhausting before the moment it usually exhausts because of the feature of the movement. And so usually it will exhaust around the Wall Street Open. Now, it's not because of the Wall Street Open, but in the time window around the Wall Street Open, or if I want to be more accurate, between the US Open and the Wall Street Open. It can be a little before, it can be a little after. And in around 10 to 15% of the case, the trend can exhaust after that red rectangle. And we have exactly the same thing for these 6 pairs. They are all in the same situation. So, but in the meantime, I'm still waiting for an entry setup. So all these candles, when they will close, will not be valid exit setup. For the pound US dollar, it's obvious. For the pound CAD, it's obvious. For the pound Aussie, it's obvious. For the pound Swiss, it's obvious. For the pound yen, it's obvious. And for the pound Kiwi, the candle is too long to be valid entry setup. So we need to wait for another opportunity. And now similarly with the pound yen. Now I will force a trade because this is what I have said I would do. Let me force a trade. Let's say on which pair would you like? I like pairs like the pound yen, for example, or the pound Aussie. But we can take any pair. So, what pair would you like I illustrate our trade risk management? And I will set our max trade monitor on these pairs. So, give me some suggestions. What are the pairs you would prefer? The pound yen. Okay, Roger. Let's take the pound yen. So, max trade monitor. I will set the max trade monitor on the pound yen, and I will load a 1% risk. So on the max trade monitor, that way I will not number the trade. Okay, let me adjust the stop loss here. Okay, and I will force a trade. So now I take a sell, so a short trade on the pound yen. So I have forced a trade, considering that this bar was a setup bar. It's not a good setup bar, it's a risky setup bar, but as I have said, I'm forcing the trade to illustrate what is what the max trade management, the trade risk management with the max is all about. So, and if I see another valid setup in another pair, so I will also take a trade on that pair. So here we have with our max trade monitor 2 panels, 1 button panel and 1 information panel. The button panel helps us to open and to close the trade with a 1-click button. And so we have 3 buttons. So we have the buy or sell button. It depends where the stop loss has been placed. My stop loss, by the way, was a little too small. I should have placed my stop loss around this area, but anyway, we have a stop loss. The MX button is a button to close half of the trade, and the XXX button to close the remaining half of the trade. We, most of the time, always close the trade in 2 steps. We consider any trade we open as made of 2 units. Each unit represents half of the trade, and so when we close 1 unit, we call that a momentum exit or a minor exit. So, and then we have the information panel with 2 columns which present the identical information or similar informations. The symbol column represents the information about the pair we are trading, and the global column represents the result if we are trading. If we are in several trades simultaneously. And for each column, we have 2 main information, the ESL result and the XXX profit. The ESL result represents the result of the trade if the price hits the stop loss. And of course, whenever we adjust the stop loss, this number will change. For the moment, because I have taken a risk of 1% for this trade, if the price hits the stop loss, the trade will lose 1%, but if I adjust the stop loss, so the risk will decrease until a moment, if this happens, the trade will be risk-free. And so this number is extremely important. And a second number is the x86 profits. The x86 profit always gives the result of the trade if I close the trade right at the present moment. So it gives always the potential result. So you can see that if I close the trade now, for the moment, the trade will make 0.1% profit. So, and we have the other numbers which are intermediary result in percentages or in pips, which gives the result on closed unit and the result on opened unit. So because we can close a trade partially, so the results are on the portion of the closed trade and the portion of the remaining opened trade. And so you will see how these numbers will evolve over time. And if I open a trade on another pair, we will have a similar panel. So with the second pair. So now, because we are in a trade, so we have to handle that trade, of course. And to handle that trade now, we are waiting for exit setups. We have several types of exit setups. We have exit setup based on indicators. We have exit setup based on price action. We have exit setup based on timing consideration. We have exit setup based on movement invalidation and on trend reversal. So we have some retracement of on many of the pairs I'm monitoring here. So this means that if the trend stays intact and the price come back on these pairs where we have these pullbacks, we will have most probably an opportunity to open a trade. And so I'm going to draw on the pound yen a vertical green line on the candle I have used as an entry setup bar, even, of course, as I have said, the bar was not a good setup, but it is just to illustrate on a fourth trade, so how we consider the trade risk management within the max. Now, this situation here represent, immediately after the trade has been opened, represent, in fact, an exit condition. This kind of situation represents an exit setup, so normally I should have made an MX at this level. This is what we do when we strictly apply the rules of the max. However, we have the concept of trade risk or the concept of discretionary decision, which is based on trade risk management, and I teach that approach deeply in our Max Advanced course. It happens in some situations that we can skip an exit setup and keep the corresponding unit we should have closed open in order, most of the time, to get a larger profit. Not always, of course, because sometimes the discretionary decision fail, but most of the time it will succeed. And so here I will apply such a discretionary decision. And the discretionary decision is the following. So let me widen the chart. So my stop loss here was a stop loss of, let's say, 26 pips, plus the spread, let's say a 1 pips spread, so 26 and 127 pips. My minimum profit I want to take is half of these 27 pips, so let's say 14 pips. And so my minimum level for my profit will be here at 14 pips, which is right at this max price level. This is just a coincidence, okay? And so if the price gives an exit setup on this level, this white horizontal line, which is the max price level or below, I will apply that exit technique. So, And because the session, our live session, is pretty much short, so 2 hours maximum, if this happens, if the price reaches this max price level, I will take a profit. And by the way, because it is a max price level, so if the price reacts in a specific way around this max price level, I will take the profit on 1 unit, if this happens, of course. Now, in around 40 seconds, all these present bars will close, and we will not have an entry setup in the other pair. We will have to wait for the next bar. So let's observe what the price will do here on this pound-yen pair. Now, the exit rule has the aim, or have the aim, because we have a lot of exit techniques, to reduce the risk on the trade should the price goes against the trade, or to lock some profits if the price goes in favor of the trade. And so, for example, here, strictly applying the exit rule without any discretionary decision, I should have closed 1 unit here, almost at break-even with a small loss, a loss of approximately 4 pips, for example, reducing the loss should this trade be closed with a loss. So, then that's nice. Spending your weekend at the beach. Yeah, your thinking process is completely right. So, observing a pullback to the Wall Street Open, indeed, I will not give your explanation, the detail of your explanation, but indeed, we are in that context when this all these true trends may exhaust before the usual time period. So I completely agree. Now it depends if the price makes an important pullback. If the pullback is deep enough to reach the Mo line and then the price comes back, then we will be again in a situation when the trend may possibly exhaust inside our red box. I have drawn, I don't remember on which pair, perhaps the pound yen. No, not the pound yen. The pound US dollar, perhaps, yeah, the pound US dollar. So if the pullback reaches the Mo line and then the trend resumes, we will be again in the condition when this true trend will exhaust in 75% of the case in that time period. Not on this price level, of course, but in that time period. And you can see the non-farm payroll has not given a big surprise, so we don't have a really big movement for the moment. So in the market, so no influence at all by that news release. We have had some volatility around the news release, but not directional and sustainable movement. And you see, in the case of the pound yen, should have I taken 1 unit in this area with the price continuing to retrace, I would have minimized, in fact, the risk on this position. Now, personally, I use this kind of discretionary decision for 2 reasons. And these 2 reasons are extremely important to apply such kind of discretionary decision. First of all, the risk I take on my trade is always a small risk, maximum 1%, and so should I lose a trade with the maximum risk of 1% or less is not a problem. And the second reason is last year, or was it last year or 2 years ago, the year before, I have made a deep statistical analysis of all my trades since 2008. And I have observed that should have I applied that discretionary decision, of course, my losing trade sometimes would have had a larger loss, but the winning trade would have produced a larger profit, and globally, my global profit would have been larger, way larger. So this is why I have added this kind of discretionary decision to my set of discretionary decisions. So, and each discretionary decision are not subjective, they are based on trade risk management. So this bar will close in now 20 seconds approximately, and we will not have entry setup because we have all bars, all blue bars are continuing to go in the direction of the pullback. So no entry setup at that moment, and even for the pound Swiss. So we still have to wait. So patience is important. Of course, I could have chosen also a constant range bar chart in such a way to have faster setup, but I like to alternate, sometimes using time bar chart and sometimes so constant range bar just for the illustration. With the constant range bar chart, pretty much we would have had probably a trade in several pairs. Now these pullback on the pound CAD and the pound US dollar are deep enough to possibly reverse the trend, the ETF trend, as it is the case for the pound US dollar, for example. But for me, the global context is still against the pound, so I will not consider long trades today on all these pound pairs. And why a negative context for the pound? This is due to the events on the Brexit. The big boys are always playing so the pound long in the case of a hard Brexit, a no-deal Brexit. And today, the Prime Minister Theresa May has written to the European Union, to Mr. Tusk, to ask to postpone further the Brexit negotiation until June 30, in order to try to have a deal. So she tried to impose a softer deal, and the big boys do not appreciate that. Of course, it's not the big boys to impose the political decision of a country, but the big boys manifestly prefer a no-deal Brexit than a soft deal Brexit, if this soft deal Brexit is not totally at the advantage of UK and so at the advantage of the pound. If through a soft Brexit, UK stay linked to the European Union, so this is a reason for the big boys to believe that the pound should continue to weaken. And this is why this kind of decision, any decision in favor of a softer Brexit for the moment, weakens the pound. Any decision in favor of a hard Brexit has a tendency to strengthen the pound. This is why I say that the global context is to short the pound today. And we can, as I have shown in all the pairs, so we are seeing that global downtrend since the European session. I can illustrate very quickly. So we can see the pound CAD is downward, the pound US dollar is downward, the pound Kiwi is downward, the pound Aussie is downward, the pound yen is downward, and the pound Swiss is downward. So they are all nicely correlated to the downside. As soon as I will have an opportunity to tighten the stop loss on the pound yen, so I will do that, and this will illustrate how the risk will evolve when we adjust the stop loss. Or if I have an opportunity to close one unit, you will see also the impact on the risk. Not only the impact on the risk, but also the impact on the x66 result or x66 profit, which is negative for the moment. Indeed, if I close the trade now, because the price is above the entry price level, so there is a potential loss for this trade, of course. So this bar will close in a few seconds now. The present bar has closed, and unfortunately, this is not enough to produce an entry setup on the pound US dollar. So probably the next one. But the pullback now has been deep enough, has been deep enough after these long bars to consider a future entry setup to go short. So let's wait 5 more minutes now, 4.5 minutes, to see what this candle will give us. If this candle ends as an entry setup bar, so I will take another trade on the pound US dollar in order to have 2 simultaneous trades. So just patience, 5 minutes, less than 5 minutes now. Nothing on the pound CAD, nothing for the moment on the pound Kiwi, nothing for the moment on the pound Aussie, and possibly something on the pound Swiss, but also a risky trade because the price also is at an extreme critical level, so like for the pound yen. But for the pound Swiss, we are on the right side of the max price level, and the next max price level is rather far away, rather far away at minimum 200 pips, so we have plenty of void below the present price to consider a short trade, but a trade which should not last too much because the price is almost at, not yet, but almost at a critical level. So the 2 best candidates now for the next entry setup are the pound Swiss and the pound US dollar. And the pound is again losing strength now. The yen is gaining strength, so I would not be surprised to see the pound yen coming back and resuming the down movement, which seems to, it seems that it is the case. And you can see that indeed the XXX result is coming back to almost break even for now. And you see, when we don't have a clear context with an important, very important news release, so the price, it takes time for the price to move, in fact. And with the non-farm payroll, we have good conditions to have directional movement in around 1 out of 3 times, on average. 1 out of 3 times. This means that 2 out of 3 times, so we don't have the appropriate conditions to exploit the non-farm payroll. You can see then the price on the pound CAD has reached the Mo line, and so this will reset, in fact, the true trend, and so to the initial situation. So we can consider now that again the red magic box I have drawn on the pound US dollar still represent now the time period when we will have 75% for this true trend to exhaust. We have to take into account that the non-farm payroll has not produced in both cases a big surprise. So these candles are simply candles with a higher volatility, not due to the news, and so we have to make abstraction of these volatilities, and so the price has made enough pullback to cancel, in fact, that these longer bars in the pound CAD, at least in the pound CAD, not yet in the pound US dollar, but you can see it's the same case in the pound Aussie. The pullback has been deep enough to reach the Mo line. Almost the case for the pound Kiwi, the price has almost reached the Mo line, and so we can consider we are still in the context of a true trend. Yeah, the sharp movement was too short because, in fact, there was no reason for that volatility. The deviation in the non-farm payroll was not big enough to create that momentum. So it's simply a volatility due to the speculative activity around the news release. Now the pound Swiss, the pound US dollar may possibly give an entry setup. The pound Swiss is also close to a critical extreme level. The pound US dollar not yet. But we still have to wait for an entry setup. I will position the max trade monitor on the pound US dollar just to be ready in case of. And I will already prepare my stop loss on the correct place. So we have rules to place the stop loss. I will place my stop loss on this level. Yeah, I definitely prefer the pound US dollar than the pound. The pound Swiss is at a too extreme level, even if the pound Swiss has a good strength. So 1 minute before this present bar to close. Yeah, then you can of course always consider what other time frame are doing, of course. But don't forget one important thing. Whenever you examine what is happening also in a higher time frame, so you will always limit the number of trades you can consider, and most of the time you will also limit the profits you can make on your trade. Because the higher time frame, the impact of a higher time frame is you delay, in fact, your decisions. But indeed, and if you are looking at a higher time frame to define where possible levels are, okay, that's okay then. Do we have an entry setup? Let me check here. Yeah, we have a resumption of the previous downtrend, so this candle is a valid remo. We call that type of entry remo, and so I will consider this trade, opening this trade if the price comes so to this level here. A little bit lower. Okay, sell. So now I have two trades, one on the pound US dollar, one on the pound yen. So I will forget the other pairs now. I'm used to never handle more than two pairs simultaneously, because I trade with our sum chart. The sum charts are more dynamic. So when we use a time bar chart, we can trade more pairs simultaneously, of course. But having to explain what I'm doing, so it's difficult to focus on more there than to trade simultaneously. So you can see that now each trade so has a 1% risk. That's a problem. I cannot move this. Let me anchor the window. Let me do that. Okay, and now let me remove the anchor to the chart that way, in such a way that I can now move my two information box. So we have a risk of 1% on each pair, and you see the second column give the global information for these two simultaneous trades. I'm going to put on each of these pairs, so an indicator we have, which is the vertical line moves with price, and I will explain why I do that. I will use, let's say, yeah, so I can use a white line with a dotted style and as a background, yes, okay, and then also on the pound yen. Okay, this dotted white vertical line will move with each close price, with each close candle, sorry. And so you'll see when the present candle will close, this vertical line will move with the closed candle. And so I use that to check where my two lines here, the pink and the red lines, are in relationship with my stop loss, because these two lines, the pink and the red line, will provide me with a guide to adjust my stop loss. And this is important in order to try reducing the risk on these two trades. For the moment, I cannot adjust the stop loss for the moment. On the red next bar here on the pound US dollar, I can say in advance that if this candle closes as a red bar now in around 20 seconds, I will have an opportunity to tighten somewhat this stop loss by a few pips, and you will see how tightening the stop loss will impact the risk on the corresponding pair. And my first level of profit for the pound US dollar with a spread, let's say, of 1%. The stop loss size is 27 pips plus 1 for the spread, so 28. So my minimum stop profit level will be at 14 pips, and 14 pips will be, so approximately at this level, I will draw that vertical line 14 pips below my entry level. So in this area, approximately. Yeah, here. So this candle has closed, and you can see that the pink line has dropped here at that level. And so on the next candle, the red line will also drop. So I can tighten somewhat my stop loss by a few pips. So let's say around 3 pips. I will tighten my stop loss in this area where I have my cursor for now, and observe how the risk on the pound US dollar will be reduced. So for the moment, the risk is at minus 0.97. If I tighten the stop loss, and I can move the stop loss with the mouse, now the risk is reduced to minus 0.84%. And on the next bar, I will be able to do the same with the pound yen. And so for each close price, I always check if I have an opportunity to reduce my stop loss, to progressively reduce the risk on my trades in such a way to try to be risk-free if at some point the price moves in favor of the trade. So the present candles will close in around 2.5 minutes. And you can see that the red magic box begin to appear because we are approaching this time window when we will have 75% probability for the true trend to exhaust. Now the exhaustion, most of the time, not always, but most of the time happens in 2 steps. The first step is, let me take my pen here. So let me explain. I will change the color of my pen, just a moment. I will take, let's say, a yellow color. I hope the yellow will be seen. Yes. Most of the time, the exhaustion of such a true trend will happen in 2 steps. The first step is the price will continue that way. For example, there will be usually a bottom inside that first time period before the Frankfurt close, and then we will have usually a second bottom between the Frankfurt and the London close. This second bottom may be higher or lower than the previous bottom. We don't know in advance. And so when this happens, when I am in such a trade, when this happens, usually if I have enough units, enough open units, I make an MX with that bottom, And when I get that bottom here, when an exit technique trigger, usually I make my XXX on that second bottom when this happens. Because most of the time, in 75% of the case, we have a continuation of this pullback and then some range, some consolidation area. Now let's take my mouse and let's observe what is happening. So the pound US dollar will close this candle very soon, similarly with this pound yen, and I will be able to further tighten my stop loss on the two pairs. Now, a way also to close the trade when the context is not necessarily absolutely clear, if you achieve some predefined results on your two trades, for example, you can decide you will be happy with 0.5% profit or with 1% profit. When the global profit reaches your objective, you can close your trade, of course. Okay, the candle has closed, and we can see that here for the pound US dollar, I cannot tighten for the moment my stop loss further, but for the pound yen, I can tighten my stop loss by around 2 pips, 3 pips, so around this level here, reducing further the risk on the pound yen. And you can see that globally, I have reduced the risk by approximately 0.3%, so 1/6 of my initial risk. There is still volatility in the market today, so with the price not really moving. So by the way, for the max members, you can recognize here on the pound US dollar that this area is an exit setup also. Remember, we are here between two specific support or resistance level, dynamic support or resistance level, and so this area represents, in fact, also an exit setup situation. But I have defined where my minimum profit should be, and so I skip all the setup, not giving me my minimum required profit. So, and remember, I applied this discretionary decision for two reasons. First of all, my risk per trade is small enough, and secondly, this provides me usually on a long-term perspective bigger profits. And indeed, then you are completely right. We are around the Wall Street Open, and this is what happens very frequently with the Wall Street Open. The Wall Street Open is what we call a price reversal time. It's not necessarily a critical time, but it's a price reversal, and usually we see the price moving in the opposite way of the underlying movement before the Wall Street Open. So before the Wall Street Open, the price was going downward, and so for some time, usually 1 bar, 2 bars, the price will move in the opposite direction, which is exactly what we are seeing. There are other such price reversal time. The Wall Street the New York Open is usually such a time period also. Not always, of course, but most of the time, this is what is happening. And there are some other similar time along the day. Now, when I have said I used my discretionary decision not to take an exit before having a first profit large enough, there is one exception to that, of course, which may possibly appear here with the pound US dollar. Should the trend reverse to the upside and give a long setup, this long setup will be an opportunity to scratch the trade, whatever the result of the trade. Ralph, the link for the private Max chat room is as usual, so let me give it to you just a moment. It's always the same link week after week. And these kind of situations are opportunities when the trader must practice patience, because this kind of behavior can be stressful moment. It creates stress with the trader, and so patience and disciplines are important. We need to wait for the price to move, either against the trade or in favor of the trade, and so apply the rules you have at your disposal to handle your trade. And don't panic, don't push on an urgency button, because at some point you see the price going against you, and you see your trade is making potentially a loss. Panic is never a friend, is never a good advisor when you trade. Ah, okay, Ralph, no problem. Now, one question which is often asked is, what is the best time frame to trade? There are two questions which are often asked in terms of time period to trade. What is the best time frame? And in fact, there is no best time frame. All the time frames are good to trade. Sometimes the best time frame will be a small time frame, and on some other time, a higher time frame will be the best. But there is no consistency in the way for one specific time frame to be the best time frame. And so each trader must choose the time frame which best suits his or her time constraint. If you are a full-time trader, you can use, of course, a small time frame, the 5-minute time frame, the 15-minute time frame, the 30-minute time frame. If you are a trader with another professional activity, then you should choose a higher time frame which fits your time constraint. Because, of course, at work, it would be difficult to day trade, except if you are your own boss, of course. And so choose the time frame which best fits your own situation. So now, when another question which is asked is, what is the best moment to trade during the day? And in fact, again, generally speaking, so there is no best time period to trade. However, you know that the market is decomposed into 3 sessions: the Asian session, the European or the London session, and the US session. And each pair, in fact, has 1 or 2 natural sessions. If we take, for example, the pound US dollar, the 2 natural sessions correspond to the sessions with their currencies. We have 1 European currency, the pound, 1 American currency, the US dollar. Similarly for the pound CAD, the CAD is an American currency. So the 2 natural sessions are the European and the US session for the pound, US dollar, the pound CAD. The pound Aussie, for example, has a European currency and a Pacific currency, the Aussie. So the 2 best natural sessions for the pound Aussie are the Asian session and the European session. And this is the general rule. Of course, and you can see that sometimes a pair like the pound Aussie may have nice movements even during the Asian session. You see, this up movement was a movement of around 40 pips, which can be nicely traded with the max. And so the best moment in the day to trade with a small time frame these pairs is to trade during their natural session. And of course, you need to organize your trading activity consequently, which is not necessarily so easy. This is why trading is difficult. And in a session which is not a natural session for the pair, usually the pair will no longer move a lot. There are exceptions to that, of course, if we have a strong context behind us or if we have an important news release which create directional movement. So keep that in mind. So this is why don't be surprised if you are, for example, a trader living, let's say, in New Zealand or in Australia to miss nice movement, because when we have the European session for most of the pairs, it's the night in your part of the world. And so that's how the market moves. So you need to be present in the market when there are the best opportunities, in fact. Now the price is reaching here my minimum price level. So if you remember, I have said previously that I will have to wait for an exit setup, giving an exit below this level, but just for the purpose of illustration of the trade risk management, and because the time is flying, I will make an MX on this pair very soon, because the price has reached my minimum profit requirement. What I'm going to do is not a max rule, but just to illustrate how the risk will drop on the pound yen. So let's take an MX right now. So I will close half. Let me show the terminal panel just to give you an idea of the trade size. So on the pound yen, the trade size is 42 mini lots, 36 mini lots for the pound US dollar. Now let me close 1 unit on the pound yen. I make an MX. You see the trade size is reduced to 0.21 microns. And let's do the same thing with the pound US dollar. I will close 1 unit here. So I'm left with 18 microlots on these two pairs. Okay? And so now let's observe how the risk have dropped on these two pairs. Minus 0.12% on the pound US dollar, minus 0.7% for the pound yen. I'm virtually almost at break even. And furthermore, I have the opportunity. No, I don't have the opportunity to tighten further the stop loss. Okay? And as I have said earlier, one possibility when you don't have too much time to trade, if your global profit reaches some level, for example here 1%, you can scratch your trade and leave the market with your profits. Okay? So you can see how the risk has dropped considerably now with two decisions: when we close 1 unit on the trade and when we adjust the stop loss. The stop loss size on the pound US dollar is around 38 pips now. What we can do, we have other alternative way to adjust the stop loss on the max with the concept of level of resistance. I can in fact adjust my stop loss in this area here where you see my mouse around, let's say the pink line. Let's move the stop loss just on the pink line. Okay? It's a coincidence the level of resistance is there. And observe how the risk will be further reduced from 0.12% to here plus 0.2%. Now the risk on the pound US dollar has been cancelled. The pound US dollar is now a risk-free trade. And globally, with the two pairs, because we still have a risk on the pound yen for the moment, the global risk now on the two pairs is minus 0.06%, so a tiny risk. Can I adjust the stop loss on the pound yen? Yes, I can tighten the stop loss around this area on the pound yen. I will do that. You can see that the risk on the pound yen is also cancelled. The yen is risk-free now. And of course, if the two pairs are risk-free, globally, we have a risk-free position. And now we begin on the two pairs to lock a tiny profit, but a profit. So we are risk-free on the two trades. And this is, I have not used, of course, for my exit, an exit setup, because we are left with half an hour or 30 minutes approximately. So I have decided here to close 1 unit at my minimum requirement profit. But normally I should have waited for an exit setup, okay? Which may happen, by the way, here with the pound US dollar. This situation in the pound US dollar may be an exit setup. So Now, Lloyd, you were asking a question, so can you comment on the reversal of both pound Kiwi and the pound Aussie? They both cross to the more line. The cross of the more line is not necessarily a trend reversal condition, Lloyd. It may represent an invalidation of the present movement. Okay, but it's not a surprise to see the price coming back. If there is still potential in the context of the true trend, what does this mean? This means that let's consider the pound Kiwi. Should we were in a short trade with the pound Kiwi, of course here we have a movement in validation of this down movement. So we would have closed the trade on the pound Kiwi. But now with the price coming back, if the trend resumes as a downtrend, we will have another opportunity to take a short trade. As I have said, given the negative context for the pound, I will not consider long trades. I will consider only short trade today. But now, because we are approaching the moment, let's come back again to the pound US dollar, we are approaching that time window when the true trend will exhaust, and we're in a true trend context for all these pairs. So the short trades now, any new short trade will become more and more risky. Okay? Yeah, indeed, we are approaching that resistance level, and you can see that the price is pulling back. And by the way, I would have made my MX at this level, and you see, my exit is not too far away from the exit I have made previously. So there is a coincidence between the moment when I have made my MX for illustrative purpose and the exit setup we have. So, but this is just a coincidence, okay? I know that sometimes some of our Max friends are surprised to see that when I do these illustrations during these open house sessions, that my decision corresponds to what the market would have made some minutes later, but this is just a coincidence. And so can I adjust further my stop loss? Not for the moment, so. And you can see, if I close the two trades now, the global profit will be around 1%. But patience is needed to achieve these kind of results. And you see how the global context, understanding the global context, helps to take the trade in the right direction. Dan says, Zego doesn't follow the market follows Zego. No, this is not true, Dan, this is not true. You are joking, I know. The more line, Marvin, is this dotted magenta line, the dotted gold line, this one here. On my max chart, let's say for example the pound Aussie, it is this gold dotted line. Okay. I draw them now as dotted lines on my template instead of straight line, because with the max ETF approach we have many more entry setups than the classic entry setups. So I rarely take a classic entry setup except for scalings, and this is why I no longer need to have our more line, our blue balance line, our red balance line as straight lines. So I prefer to draw them as dotted lines. But I still watch closely the more line, because when the classic trend coincides with the ETF trend, this more line can still be used as a criteria to pinpoint a movement in validation. So now the present candle will close in around half a minute, and let's see if we will have the opportunity to tighten a little bit the stop loss. And yes, I see that on the pound US dollar I will have that opportunity. Not yet on the pound yen. When I know that an XXX is due, I will not illustrate the scaling technique. We are too late in the day. We are approaching, you see, the time period when this true trend will exhaust. When we are sure that the XXX is due, I will use the innermost line to adjust my stop loss. You can see that here the innermost line now is the red line. I will adjust my stop loss based on this red line. And because the red line is now pointing downward, at the close of this candle, I will be able to adjust my stop loss somewhere in this area, locking a little more profit on the pound US dollar and so on the global position. So we are waiting for the next price quote to close the candle. Normally the candle has already closed. And you can see in the case of the pound yen that the price seems to pause here around this max price level. So now let me tighten a little more my stop loss. I can tighten my stop loss here by several pips. Let's say in this area here, I can tighten it by around 4 pips. And you can see that doing so, I will lock a little more profit on the pound US dollar and so globally on the position. Now, at the close of this blue candle on the pound US dollar and on the pound yen, we have an exit technique, an exit rule, which has triggered, which is an exit setup given by our RSI, which is the stochastic of the RSI. It has given an exit setup, but because I have already made an exit in this bottom formation, I will skip the exit setup given by the RSI here. We have one concept in the max, because the price or the trend is made in a downtrend is made of lower lows and lower highs. Most of the time we'll have an MX when the price is making a bottom. While the bottom is forming, we may have possibly several exit rules triggering either on the same candle or on different candles. If we have exit setup triggering on different candles while the price is forming a low, we consider only one MX and we ignore all the other MX. We wait for the price to finish its pullback, and if the price resumes the down movement, the next exit will be in the proximity of the next bottom. So this is why here, because I have made my MX here, I will ignore the exit setup given by the RSI. And this is the case in both pair. So you are welcome, Marvin. So if you have any questions, so we are left with around 20 minutes before wrapping this open house session. So if you have any questions, so feel free to pose your question in the question area, or for the Max member in the Max private chat room. So thanks, Dan. Thanks. By the way, just before I forget it, so every Saturday at 4 p.m. Eastern Time, so New York time, we have with our Max members what we call scrolling parties, which are practice sessions. So during these practice sessions, so we update the news release calendar, we update the top 10 pairs list, we update the pairs suggested for each day of the coming week, and then we consider some questions And one of the questions we consider is to go into some more details in one specific point of the max. We can, for example, take a pair at some specific day and scroll through the chart, eventually with a simulator, bar by bar, tick by tick, to see how some nuances may apply with the max and what the decision should have been, just to practice the rules with the max. And so it happened that this coming scrolling party, so tomorrow, will be a free scrolling party, so the public is invited, so the non-max members are invited to participate, just to give them an idea what our practice session are. And I think that the subject we will present, we will consider during that public scrolling party will be useful to everyone. You should receive an email. You have probably already received that email, or otherwise you will receive that email imminently today or tomorrow before the scrolling party, of course. And so you are warmly invited to participate to this scrolling party. So. You can see here that for the two pairs, the price is resuming, seems to resume the down movement. So this will be enough, most probably, for the pound US dollar to, or perhaps yes, perhaps not, to tighten further the stop loss, certainly with the pound yen. Even if it is 1 pip, 1 pip is 1 pip. 1 pip, when you tighten your stop loss, even by 1 pip, in fact, don't forget that you are looking more profit in the worst case scenario. Now, of course, using our max ETF sum chart, which are constant range bar chart, we would have had many more opportunities for decisions inside these movements, even if these movements are not large movement, we would have had many more decision opportunities. But remember, the non-farm payroll was not giving the appropriate context to have sustainable and a directional and sustainable movement. When I say sustainable movement, I mean a movement, an ample movement. And when I say directional movement, I say a movement in the direction indicated by the news release itself. So a good surprise, a big positive surprise in the news release usually strengthens the currency, and a big negative surprise weakens the currency. And so knowing if we have a big positive or a big negative surprise helps to define the direction of the trade we have to take. What does this mean? It means that should the non-farm payroll be extremely positive for the US dollar, this means going long for the US dollar or short for the pound US dollar. And should the non-farm payroll be extremely negative, this would mean going long, going short the US dollar or long the pound US dollar. In fact, the rule is very simple. If the news concerns the first currency of the pair you are trading, with a good news, you have to consider going long the pair. A bad news, you have to go short the pair. And it's exactly the inverse for the quoted currency. For the second currency of the pair, a good news, you have to short the pair. A bad news, you have to go long the pair. And now, if you choose the pair you monitor among the pairs we suggest for every day, you will increase the odds to catch nice movement. And if you trade during the entire period of the corresponding session, for example, for all these pairs, mostly during the European session, starting with the Frankfurt Open or eventually the London Open, you will increase your odds to catch the entire trade, the entire trend. And doing so So it becomes way easier to achieve a minimum result per day. You see here the context were not appropriate, but if I close the trade now, I make more than 1% for the day. And remember, if you trade every day of the year, I don't say it's easy, okay, don't get me wrong. It's not necessarily easy because we have all our life also and our constraint in life. But if we trade every day of the year and we make on average 0.5% profit per day, just 0.5% profit per day, and we let the profit to compound, this means we progressively increase the size of the trade. Automatically, the MTM do that. The MTM calculate the trade size depending on the balance we have and depending on the risk we associate to the trade, 1%, 2%, and the size of the stop loss. So if you let the profit compounding, so with 0.5% profit per day on average, at the end of the year, you multiply your account by 3. If you succeed to make on average 1% per day, at the end of the year, you multiply your account by 10, between 10 and 12. So let's say 10, which is a huge, huge result. But of course, trading every day is not necessarily easy. For many reasons, and making necessarily 1% per day needs to choose carefully the pairs you have to monitor, needs to focus on the details of the price movements, need to understand the global context. So there are a lot of things you have to pay attention to be consistent in the way to apply a specific methodology. Personally, I consider that it's not the technical aspect of the max, which is the most important aspect in trading. They help to time the decisions, when to make an entry, when to make an exit. And of course, we can always improve these techniques. But the most important for me, based on my long experience now in trading, is understanding the context. If you understand the context, you will know most of the time in which direction to take your trade. And so you have just to be patient for all the other conditions to match in order to have a practical trade. And you can see here the price seems to pose now around this max price level on the pound yen. So, and because for the moment all these pound pairs are pretty much nicely correlated, so we have the same type of behavior at the present price. So the price is ranging globally. And for the pound CAD, let me check the pound CAD here. Yeah, the pound CAD is not a surprise, has a similar behavior. You see the deviation on the non-farm payroll for the pound CAD, so was not a big surprise. So the price is not moving nicely. No big movement. At the close of this candle, so if my profit is 1% or above, I will scratch the true because the time is flying, and I will show you some other recapitulative information before we wrap up this session. So, okay, this candle is closed. So if the price reaches a 1% profit, I will close the two trade. In the meantime, have I the possibility to tighten my stop loss? Let me check here. Yeah, I can tighten further the stop loss on the pound US dollar and not on the pound yen. So I can scratch close the two trade because I am now at 1% profit. So let me close the pound US dollar. Let me close the pound yen. So closing the two trade with, as you can see, I have still the trade opened here. Have I pushed on what have I made here? Close. Okay, now the trade is closed. So you can see that 2 units have been closed. These small triangles show the 2 partial exit on the 2 trades, and so 1.01% profit, a little less than 0.5% profit on the pound US dollar, and a little more than 0.5% profit on the pound yen. So this blue candle, by the way, was not an exit setup bar, but because we have to wrap up this session, so I prefer to close the trade and so give you some more general information. So we don't have a long setup done in this pair, not in the pound US dollar yet. It's a little too early. The present candle may be a long entry setup, and on the pound yen, we cannot anticipate a trend reversal yet. Okay, a little too early. So if there are no questions, let me remind you some general information about the max. Let me first of all take out these max trade monitor, so in such a way that we will have more place on the chart. And so I will close them, both of them. Okay, that way. And let me display my PDF. For those of you who were present yesterday, so we have made the presentation for the max, during which we have proposed to you 2 of the levels of the max. We have the max ETF primer, which is the first level of the max we propose. So the max ETF primer explain a subset of the max with 2 entry setups and their variations, and just a few exit techniques, just to give you an idea who we are and what the max may be. Because it is important when you consider to subscribe to a specific trading course to get confidence in the subject itself and in the person who give the training. And then our flagship course is the Max ETF Standard with all the scaling and scale out technique. So here we have the special webinar price for these 2 courses. So the Max ETF Primer is proposed at a price, an introductory price of $159 instead of $329. And the ETF Standard is proposed at $2,399 instead of $2,999, so with a deep discount. If you have any question before we wrap up this session, so we will be glad, Craig and myself, to answer. So let's consider 2 or 3 more minutes, and in the meantime, let's come back to the chart to see what the price is doing. You can see that on the pound US dollar, the price seems to resume the down movement. We are approaching the red magic box here, and for the pound yen, the price seems also to resume somewhat, but still remaining around these max price levels. Oh, thanks, Dan. Yeah, making 1% in such poor conditions is always awesome. Lloyd, you have enjoyed this session. Okay, that's nice. Oh, thanks, Paul. So I thank you very much for all your participation. I hope you have enjoyed this session. If you have further questions in the future, feel free to contact us. So you have the link here in the PDF. So you can consult our website. You can email your question at our email address, and you can even contact us by Skype when we are available. So feel free to use this way of communicating with us if you have any questions on any subject consisting or related to the max. Okay? Well, so again, thank you very much. Bye, everyone.